when underwriters, from an underwriting standpoint, when you're underwriting these policies, you're underwriting on the basis that they have this contingent exposure, but you're also rating this coverage and you're pricing it with the expectation that when they are acting as a traditional freight brokerage, right, they have rules, regulations that basically determine what a freight broker is and is not responsible for, right? And so, when underwriters who know this space, when they're pricing this coverage, they recognize that when and if a freight broker is named in this suit, right, that is the result of an injury, fatality, and most often the claimant is going to argue negligent selection, right, or vicarious liability. But the underwriters are pricing this on the basis that when and if these suits pop up, and when and if the insured is sued, they're going to defend the fact that the freight broker is not legally liable for these sorts of claims or damages under Carmack, right? And they're going to argue federal preemption. When you're stepping outside of that traditional brokerage, definition role, right? And you're now taking on and leasing assets and you're assuming liability, it's going to be much more difficult and challenging for any attorney, any insurance company to defend you and to defend the fact that you're not legally liable, because now you're no longer acting as just a freight broker. You're now holding yourselves out as a carrier in a contract, right? So it's going to be much more challenging. And had they known in advance, they probably wouldn't have written the account, the risk, or they would have priced it differently, right?